So good afternoon, distinguished participants and esteemed guests. We are sincerely sorry and we apologize for the delay due to technical issues. But we try and keep to time and make sure that we make up for this. My name is Cyril Okorigwe. I'm going to be your host for today's event, and it is my pleasure to welcome you all to yet another edition of the RegTech Africa Roundtable Webinar, themed compliance and AML challenges and opportunities in Nigeria. As we gather here on this platform, we are reminded of the critical importance of regulatory compliance and the fight against money laundering, particularly within the rapidly evolving financial landscape of Nigeria. Today's roundtable has been carefully curated to explore these issues in depth, bringing together leading voices from across the industry. Before we delve into the discussions, it is my pleasure to introduce the esteemed panelists for this session. And in no particular order, beginning with Obinna Okafor, who is the Managing Consultant and Chief Executive, Vic Cosbin Consult Limited. Mohammed Eman, who is a representative of KYC in Africa. Kelechi Uzoka, the lead partner, K&C Partners. Rose Alero, who may be unavoidably absent. She just sent her apologies a few minutes ago. She's Executive Director, Financial Crimes Compliance, Hackathon. Iyade Azumani, the Head AML and MLRO on Limit Nigeria. Rory Doyle, Head of Financial Crime Policy, Fenego. Sophie Nsogaka, Internal Control and Compliance Manager, National Financial Credit Bank, Cameroon. Mohammed Jia, Chief Operations Officer, NFIU, and Vice Chair, Information Exchange Working Group, the Egmont Group. Robinson Wangele, Head of Compliance, MLRO, Jumia Group. Nathaniel Odofin, Head of Products, U-Verify. And William Bolivar, who is going to be serving as the moderator of this session. He's the founder of KYC in Africa. So on these notes, and without much ado, I would like to hand over to William, who is moderator, to take on from here. Thank you very much.
Thank you, Cyril. Once again, welcome everyone to today's panel. So as we highlighted there, the roadmap is going to be a good one, but most importantly, and in order to catch up in some of the time that we've spent with the glitch, today our focus is going to be AML challenges and opportunities in Nigeria, and we'll dive into several topics. The first one being Nigeria's position with the FATF grey list and what it means to you, strategies combating the financing of terrorism in Nigeria, the transformative role of RegTech in compliance efforts, and preparing the next generation with essential AML education. So I'm excited once again to have the panel here. Once again, thank you very much. But most importantly, for the audience who's all around the world joining us today. So without further ado, we can dive into the first question for Mohammed Jia. What is the current status of Nigeria on the FATF grey list, and what are the recent developments in this area? Mohammed and Jia, can you hear us?
Oh, so sorry. I just to articulate my point, I have just few slides which put in perspective my understanding, my position, and to explain those key aspects that I'm supposed to talk about. I don't know whether time would permit me to just share these few slides just for a few minutes. I can also share it after this.
Of course, I think it'll be okay. Blessing that Mohammed had the access to it to share his slides.
Yes, I have.
Great, thank you.
Okay, thank you. Just a quick one. I don't want to waste much of our time, so I don't need to bother much about money laundering aspect. We have different type of aspects, but I will just delve into completely the core questions that were given to me. Now, what is the overview of AML CFT compliance? Dealing into that, I will actually want to show us that globally in the African continent, as a continent, we have a lot of issues and challenges. And this is why we am so happy that RegTech is organizing this. You can see from the effectiveness of the countries, if you look at the entire Africa, from all the 11 immediate outcomes in terms of understanding, 30 out of the 40 countries that have been assessed by the FATF, 25. Then in terms of 30 is low effectiveness. In terms of international cooperation, 25. In terms of supervision, and in terms of application of preventive measures, if you look at it generally, you can see that in all the immediate outcomes, high effective, no country has a single high level effectiveness, and must have low level effectiveness in almost all the 15 immediate outcomes. And you can see this clearly from the West African countries. Everywhere is red in terms of immediate outcomes. And if you look at it from the North Central African countries, at least we have some that have substantial level of effectiveness, and the bulk are still red. And this is why we have a lot to do. If you look at the Eastern and South Africa, the same thing, we have some that have moderate. And coming back to Nigeria, and in particular, Nigeria is currently in the gray list. How did we get into the gray list? Nigeria was evaluated in 2019. We have 84 deficiencies that were identified, and we are given 1 year observation period. And in October 2022, when we submitted our post-observation report, the country effort was measured, and they say we have been able to identify, we are able to address 69 out of the 84 recommended actions, leaving us with 15 recommended actions which were still critical. And that was why the country was added to the gray list. And we are given from that February 2023 to May 2025 to address those issues or being blacklisted. And this is the score sheet. In terms of effectiveness, Nigeria have almost 9 out of the 11 immediate outcomes. We have low effectiveness, and the condition is that any country that has 6 out of the 11 low effectiveness, then we should go to the gray list. And in terms of the technical compliance, any country that has big 3 non-compliance or partial compliance in the big 6, and the big 6 are the ones in red. 3, that is criminalization of money laundering. 5, that is criminalization of terrorism financing. 6, that is in terms of targeted financial sanction. 10, customer due diligence. 11, record keeping by financial institutions and reporting entities. 20, submission of reporting suspicious transaction reports. So this is where we are now. The being in gray list comes with economic impact. It comes with reputational damage. It has also put a burden on compliance on the country. We also have financial sector impact, because at the moment it erodes the financial market confidence in financial institutions that are in the country where that is actually in the gray list. So this is where we are. And what are we doing? We want to ensure that the country did not enter into the blacklist. If the country enters in the blacklist, there will be definitely increased country sovereign rating, there will be increased cost of foreign borrowing, completely loss of direct investment, and loss of corresponding banking services, reputational damage to the image of the country and its citizens, difficulty in obtaining financial financing from global bodies so that IMF, the World Bank, and the FATF call on all the jurisdictions not to deal with Nigeria. At the moment, we have DPRK, Iran, Myanmar in the list. Nigeria was not supposed to go there. What are we doing? Going to the question you asked now. What are we doing to get out of this list? We are supposed to be submitting reports annually to the regional style body of the Financial Action Task Force, which is the GABA. And every quarter, we are also supposed to, at the end of this month, we are also submitting this report. So what have we been able to do so far? Because every quarter, we must submit a report to the Financial Action Task Force. Now we have submitted 3 follow-up reports. 2, we submitted one at the end of 2022, another one at the end of 2023. Now, when at the time the country was evaluated, we have only 7 compliant, but now we have 13 fully compliant, 18 largely compliant, 9 partially compliant. For us to get out of the gray list, the country must make sure that all the recommendations, 40 recommendations, are either fully compliant or largely compliant. We have also submitted 3 follow-up reports. At the time the country was grey-listed in February 2023, we have all the 15 remaining actions as not addressed. When we submitted our first report in July 2023, all the 15 actions were considered to be partly addressed. Now, in November 2023, when we submitted the second follow-up report, progress report, we are able to have 3 fully, largely addressed, remaining 12 that are partially addressed. As at the last report we submitted, which we defended in June in Cape Town, we have been able to get 5 of the 15 actions fully, partly, largely addressed, remaining. For us to get out of the gray list, the country must ensure that all the 15 actions are largely addressed. Now, these are the areas we have issues with. This is why we need the reporting entities. We need that because in terms of preventive measures, we are still not fully addressed. Financial institutions need to develop solutions, need to be able to submit suspicious transaction reports. They need to do effective transaction monitoring. Then we also have supervisory issues, and these are areas that are outstanding. Now, the challenge again is, what will happen if Nigeria get out of the gray list? If we get out of the gray list, that does not mean that it is over. Just like what Albert Einstein said, life is like riding a bicycle. To keep your balance, you must keep moving. Another assessment, the 5th round of mutual evaluation for Nigeria is coming up in 2027. This is when the country will go through the same process. So we must put all the systems in place. So what are we trying to do? What is the importance of this ensuring compliance? Number 1, we will be able to safeguard the financial system. We prevent crime, we ensure stability. And again, number 2, international reputation and trust. By the time we enforce, we ensure that all our systems, our AML CFT systems, are fully compliant, then there is this global compliance that we will surely achieve, which can prevent us from sanctions, from blacklisting, from grey listing. Attracting foreign investment. This is also another key importance of ensuring that our own MSCFT systems compliant. Then we have the economic development. We will prevent the illicit financial flows in and out of the countries, encouraging legitimate economic activities. Now, legal and regulatory obligations, we will be able to fulfill that, and also ensuring national security. We are able to combat terrorism, reducing the rate of crime within the Africa as a continent. Social and ethical responsibility is also something that is key. We promote integrity, protect vulnerable population, and we will also be able to align our own systems with the global standard, meeting up with the Financial Action Task Force compliance. Now, what are the challenges? The challenges we have observed is, number one, regulatory and compliance burden. There are complexity and dynamics of AML CFT laws. That is why the reporting entities are finding it challenging. High compliance cost. It also comes with a cost. But one thing that we need to always say is that the cost of complying does not equate the damage and the reputational damage it will do if an institution is not found to be compliant. Now, the second challenge is technological and infrastructure gap. This is where the tech companies, the RegTech, and all the tech companies need to come in, because lack of advanced technology is affecting the monitoring and reporting of AML CFT. Inadequate infrastructure to support comprehensive compliance program is also a challenge. Then there is also corruption and weak governance across the African continent. Impact of corruption on enforcement and challenges of interagency coordination and cooperation. Capacity building. This is where training agencies need to come in. Limited capacity and training in AML CFT practices. Need for continuous professional development. Public awareness is also low, and great listing of the FIUs. The opportunities now. What we believe is that leveraging technology and innovation in terms of advanced analytics and artificial intelligence will increase the ability of reporting entities to be able to generate anomalies, unusual transactions that indicate money laundering, indicate terrorism financing, and other criminal activities. Blockchain and digital identity can be used to ensure people are who they are. So this will reduce the fraudulent activities in the financial sector. RegTech solutions. By the time we have regulatory technology solutions, this will help to automate compliance, reduce human error, and improve real-time monitoring. Capacity building and training. Training is very effective, is very essential to AML CFT. Ongoing education should be continuous. Public-private partnership, collaborating with government and agencies and other entities to ensure they share best practices and intelligence. Enhance regulatory framework in such a way that they will have a risk-based approach. Tailor the measures and according to specific risks exposed by different sectors. Harmonize regulations is also very key, is the opportunity, because being challenges we are facing in the African continent, it poses comes up an opportunity for all the stakeholders to up their game. We should have harmonized regulations, streamline and harmonize AML CFT regulations across various jurisdictions to ensure consistency and ease of compliance, especially for multinational cooperation, strengthening an international cooperation, information sharing. Criminals are always moving across the border. So improving cross-border information sharing through platforms like the Financial Action Task Force, Egmont Group, to track and prevent movement of illicit funds will be very key. Joint investigation, like we just finished a training meeting this morning between the FIUs in the West Africa and those ones in the North Africa and Middle East, in a way for us to have joint investigation teams to address the menace of terrorism. The same can apply to money laundering and other related crimes. Then there should be improved. There is an opportunity to have improved governance and accountability, internal controls within the systems, within the agencies, within the entities. Auditing and reporting is also key. Public awareness and consumer education are areas that the opportunity that now comes with the challenges we have in AML CFT. Then the awareness will increase, will encourage reporting to the appropriate bodies, and that. So adaptation to emerging risk. This is also another key area. Like now, money laundering is moving into cryptocurrency, digital assets. This is also an area that opens up another opportunity for all the stakeholders to delve into. Evolving threat, continual assessment, and adaptation to emerging threats such as cybercrime and misuse of financial technology is also very key. Then there's an opportunity again for enhanced collaboration between even the law enforcement agencies, between the reporting entities in terms of data collaboration and capacity building. So just to summarize my thoughts is there is need for strengthening the systems, for safeguarding the financial systems, ensuring national security. Opportunities we have identified is clearly, if effectively harnessed, can significantly enhance the overall compliance landscape, reduce the risk of financial crimes, and improve the resilience of financial institutions against money laundering, terrorism financing activities. So there is urgent need for all stakeholders, reporting entities, supervisory authorities, law enforcement agencies, financial intelligence units, and all the stakeholders in the private sector to take proactive steps towards enhancing AML CFT. So thank you very much. This is just to be able to drive home these thoughts. That is why I decided to just quickly put it in a slide form. So thank you very much.
No, Mohammed, thank you very much to you. I mean, I think the whole audience, including myself, will agree that that was beautifully put together in terms of how you made your point in regards of the challenges, the good things, the bad things, and what's still to come. So on behalf of the audience, I appreciate that.
Thank you.
Brilliant. Thank you very much once again. So just moving on to the next question. Now we're going to see things from the other side. For Robinson, we can kick off and followed by Electru. What are the industry perspective on the recent regulatory changes that are coming so thick and fast?
Okay, thank you. Am I audible enough, William?
Yes, loud and clear.
Okay, all right. Thank you very much. I'm happy to be a speaker in this roundtable event. So you said, what are the industry perspectives on the recent regulatory changes? Okay, there have been several regulatory changes in the various industries across Nigeria, especially in the financial and technology industry sectors. The companies under these sectors have different perspectives to these regulatory changes. Most of these industries are primarily overseen by the Central Bank of Nigeria, the Security and Exchange Commission, as well as the National Information Technology Development Agency. I'll be pointing out my perspectives on these regulatory changes. One of it has to do with consumer protection. These regulations are made to give an appropriate degree of protection for consumers, data protection, as well as finance protection. Secondly, the protection of the various institutions under these governing bodies. The regulations guard institutions against being used as channels for corruption, and they give a sense of confidence, especially in the financial system. So these regulations are put in place to avoid litigations. They are put in place to avoid reputational damage and the risk of and mitigation risks in general. Okay. Also, they are put in place to reduce financial crime. With the adequate compliance of these regulatory changes that we've come across, I think it will help take Nigeria out of the gray list, just as Dr. Gia has pointed out. So these are just a few points of mine with respect to my perspectives on the regulatory changes that have come up.
Thank you very much, Robinson. And Electru, I don't know if you have anything to add to Robinson's point there. don't know if we have him online. Has he dropped off by any chance, Blessing?
I don't know. Am I being heard now?
Yeah, we can hear you now.
Okay. So there have been positive perception, especially among financial institutions, trying to strengthen the Nigerian financial system. A lot of financial institutions, they've recognized that we need stronger AML CFT measures to protect the integrity of Nigerian financial system. And like Mohammed said, there've been the issue of compliance costs and also the operational challenges. But these things are important because they must be done if we need to protect our financial system. And the fintechs, the new guys or new kids in the block, most of them have seen this as opportunity to innovate, to try new things, to get up there where the banks and other financial institutions have been. While some of the fintechs are saying, oh, there's a lot of regulatory pressures. Because if you look within the past 1 year, there've been a lot of CBN circulars, trying to get these fintechs and most of these financial institutions to upgrade or update their KYC measures. And all these things are done to sort of, check the AML CFT compliance solutions in Nigeria. And then the collaboration with traditional banks, most fintechs now, I wouldn't want to call names here, but most fintechs now have seen the importance of collaborating with most of these traditional banks, to meet the new compliance standard. There's a CBN regulation. I think that regulation was published. I think around early this year. Where they told some fintechs were told to, especially those who have banks as their PSPs, that they should work around some of the things, especially to upgrade their KYC. And then for in our new the Money Laundering Act, Prohibition and Prevention Act, the DNF FBPs, that's a designated non-financial business professions. There've been initial resistance, but I think everybody is trying to now adjust because in the new law, sectors like real estate, and including the legal sector, which I belong to, there's been this initial resistance on how to be captured, under the DNFBPs. But in all, there've been this general and increased awareness on AML CFT, which I think it's a good thing if we are to, go out of the grey list. If we are to be taken out of the grey list, I think it's really a good step in the right direction.
Thank you, Ekleche. And I agree. I mean, it's those industries that are new to the regulations that we all have to be aware of, such as like the real estate, as you highlighted there. So thank you. I mean, financial services has always been regulated, but it's those new ones. So moving forward from a technology perspective, this one, obviously, we can start with Rory, followed by Nathaniel. What are the opportunities and some of the challenges that we're seeing in the adoption of RegTech at the moment in the industry?
Hi, William. So if we think about what the three speakers have so eloquently stated before, whether it's Mohammed or Robinson, there's more regulatory scrutiny in Nigeria and there's increased legislation, and that's due to the grey list. Now, unfortunately, that means it's been coupled with an increase in the number of financial institutions we've seen around Nigeria. And that's because driven by the increase in the amount of fintech companies, microfinance institutions, and digital banks. Each of these institutions needs to have a client due diligence process. They need an MLRO, they need a deputy MLRO, they need a sanctions team, they need an enhanced due diligence team, they need a senior management approval queue, they need a normal CDD team and a transaction monitoring team. That means that there's a high demand for skilled personnel, but unfortunately there is a talent gap. Now that talent gap is not just centered around Nigeria, it's centered the world over. And that's where we see cloud-based solutions such as Finergo coming in. We use artificial intelligence and machine learning as well as being in the cloud to speed up the process and help verify securely for who your clients are, what they do, why they want to work with you. So when you talk about opportunities and challenges, they're actually the same thing. You know, the challenges are increased scrutiny, but that means that there's more demand for solutions like Finergo within West Africa. So, you know, we see a great opportunity here within the sector. I'll try and be brief because I think we're running over a bit of time, William, are we?
Yeah, no, thank you very much, Rory. That's much appreciated. And that's something, having been on the ground in Nigeria earlier in the year, those were the conversations in terms of the mix and regulation, how we can get it to the right fit in order to be able to move forward. Nathaniel, over to you. I mean, obviously you sit on the other side as well. What are you seeing from a challenge perspective?
Okay, from the challenger perspective, yeah. So again, from what other speakers have spoken before, we see that there's a lot of challenges right now, and of course, from the RegTech perspective, we have issues around legacy system integrations, because right now most of these financial institutions, they have currently systems that they use, all right, and then which is not really helping as much as they need. And so integrations with legacy system is a challenge currently in working with financial institutions. We also have issues around mental shift in the way things are done. All right. And so, and this is not just with the financial institutions alone. Even at some point, even some of the regulatory bodies, which I can see some, right now we have some positive changes really, because the need is biting everyone hard. All right. So gradually we're actually seeing even regulatory bodies opening up to innovations, opening up to the possibilities of, I mean, I see the first speaker talking about crypto, talking about blockchain. You know, these are things that a few years back, regulatory bodies wouldn't be talking about those things, right? And so they've hindered progress in terms of innovative ideas and to solve the challenge that is on ground. And so mental shift is still gradually a challenge that we're overcoming. And of course, we also have third-party risk. What am I saying? What do I mean by third-party risk? Now, sometimes as RegTech, we aggregate data from different sources so that we can use them for screening, for PEP check and all of these. And sometimes some of these data reside with third parties. And and some of these third parties are even regulatory bodies themselves. Some of these third parties are government agencies, you know, who have the sole right to have some of those data. When it comes to data privacy, it has to be with some national database. And of course, sometimes we see that there are downtimes, you know, with those guys. And once there's a downtime, every client will be on our neck and say, oh, what's going on? You know, so, and we begin to run here and there. So, oh, NIMC is down, this is down, you know. And so there's also that a challenge around third-party reliance, right, that also creeps in sometimes while we are trying to address some of these challenges. And the competencies that has been mentioned earlier on too, and the need for education, the need for public awareness, that's also a challenge and that needs to be addressed. So yeah, let me keep that brief for now. Thank you.
Thank you, Nathaniel. I mean, that goes quite nicely. I won't add anything because it goes quite nicely into collaboration between industries. So moving forward to Sophie and Electra Wu again, what strategies can we adopt in regards of collaboration between the private sector, the public sector, as well as the regulatory bodies? How can we move forward in an effective way? So if we can start with Sophie.
Thank you, William. I think, sorry for the technical issues I've been having. That's at times these things happen. Thank you for your question. And a lot has been said already. You had Mr. Gia, who started with a brief summary of most of the things. But what I would like to add is when we talk about regulation, most of us have spoken about regulation. Regulations are usually very nice to put and all that. But I'll add that we have the Financial Action Task Force that has put some recommendations when it comes to international cooperation. You have recommendation 36 to 40, which is talking about recommendations, which I think we need to, countries like Nigeria, they need to take all those recommendations into place when they are putting in place the regulations, do like a gap analysis with the regulations to be sure that the regulations carry these requirements, and equally check if the region and the practicalities of the region are being taken into consideration. And that said, another aspect with regulation is implementation. We can do all the nice regulation, even the consumer protection, which we're talking about, but how far do we implement these regulations? For example, you have Nigeria has a lot of good regulations in every aspect when it comes to KYC, AML, but unfortunately, Nigeria was put on the gray list in February 2023. So I think we need to look more on how can we implement and enhance training and capacity building so that all the various stakeholders are aware of what is required to be able to implement all these regulations and mitigate any AML or financial crime risk. And I think to the partnership, the public-private sector partnership, which had already been mentioned, needs to be enhanced, because when that partnership is strong, you have information sharing, which is more. And in that way, we can be able to track all the criminals, have the information that we have, get into mutual legal assistance with other countries, because we know some of these criminals and criminal organizations, they operate within multiple jurisdictions. And for you to be able to get information from other jurisdictions, that collaboration needs to be there so that we can be able to get information at any time that we want. I think those are some of the strategies. And most importantly, something that we've already talked about, utilization of technology, because we have big data to analyze. And when things are being done manually, there's always room for errors. So when we are able to use technology, we are able to enhance our collaboration with other countries. For example, if you want to do KYC verifications for somebody who is in another country, another jurisdiction, how do you go about it if you don't have technology to be able to do maybe KYC verifications and all that? So I think the use of technology too can be able to enhance cross-border collaboration. So those are some of the strategies. So some are already existing, but we need to look more and do self-assessments and actually identify where it is lacking to be able to beef it up and address some of those lapses before you even have people like the free regional style bodies like GABA coming. When we already, as Nigeria, we've already seen what is wrong and already addressed them before they are coming. That we don't sit and wait until GABA comes before we are aware that, okay, this aspect is lacking. So I think those are some of the strategies that we can put in place to enhance international cooperation.
Thank you very much, Sophie. True, I don't know if you have anything to add to that, considering Sophie covered quite well all the topics.
Okay, yeah. So I have something to add here. So I think a public-private partnership, where the financial institutions, the fintechs, the DNFBPs, and the governmental agencies and other stakeholders, they come together to foster better information sharing. This task force, they can try to identify emerging threats, developing, joint solutions, and trying to curb these AML CFT practices. And also, they can, have platforms, collaborative platforms where, they share real-time information exchange between the private sector and also the regulators, to help quickly identify or address suspicious activities or transactions. And if these platforms are available, I think it's going to help in improving the best practices and also increase red flags wherever they are, and issues of regulatory sandboxes, creating pilot programs, especially to test for, now there's crypto, there's blockchain, AI-driven analytic, these things, biometric identifications within this sandbox. If these things are created, it's going to help, it's going to help the AML CFT tools and increase more effectiveness and scalability. Also, I think training. Mohammed talked earlier about trainings. I think more trainings should be done, cross-sector training programs, international collaborations between countries and between agencies across countries. And also, other speakers talked about, leveraging of technology. We can't overstate the fact of how we need to get in technology for us to, enable secure and also have transparent information sharing system between financial institutions and regulatory bodies, getting in artificial intelligence, machine learning, and also data analytic in all these things. I wouldn't want to waste more time because I know there are other speakers and questions, but I think there need to be continuous monitoring and also feedback loops between the private sector and the regulators. All this, if done very well, would make the AML CFT practices remain very effective and also up to date.
No, thank you very much. Very insightful. So appreciate that you took that extra minute to add your point there. You highlighted obviously education, training, and that nicely takes us to the next topic, which is the compliance ecosystem. So this one's for Mohammed, Imam, and Iyadi. How can we prepare the next generation of compliance officers and professionals effectively, considering that financial crime is not going to go away? So how can we enhance the learning and how can we improve it going forward?
Hello, William. Thanks for this question. This is really a good question, and we can start from where Jay ended, that regarding the training and the building compliance. And actually, to effectively prepare next generation of compliance professionals, we must implement a comprehensive forward-thinking approach. And this approach have several key areas. First, it's the early education of awareness. It will be like introduce compliance and the ethics course for undergraduate business programs. And this can be done also by collaborating with universities to develop specialized compliance courses or degrees or concentrations. And also organize compliance awareness campaigns for high schools and their colleagues to spark compliance interest in early stage. Also, practical hands-on training. It will be like develop internship programs specifically for compliance rules in various industries, in fintech industries, RegTech industries. All of these industries, we have to implement these internship programs, and it will align with preparing this next generation of compliance professionals. Besides implementation of mentorship programs, pairing the experienced professionals with aspiring compliance officers. And by implementing these strategies, we can create a robust pipeline of well-prepared compliance professionals. And as we are with RegTech Africa and the KYC in Africa, so platforms like KYC Local and the KYC in Africa and RegTech Africa actually play this crucial role in this ecosystem by providing this accessible and up-to-date resources and fostering this compliance community from early stage. And we can say that this courses demonstrate hunger of quality compliance in early education. The comprehensive approach not only prepare individuals for specific compliance routes, but also it's qualitative a generation of professionals who understand the broader of implications of compliance. There will be this new generation will be equipped with the necessary knowledge to navigate these revolving complexities of the compliance and the regulatory change. And not only in Nigeria, but I mean for all Africa, because if you are talking here that compliance industry is something new. So we need to prepare this next new generation by applying all of these points to them. Also, investing in these areas, we have to ensure that this next generation of compliance professionals have to be prepared to face future challenges and also to drive a culture of integrity and in the global business environment. So this is, my input for how we can prepare this next generation for the compliance professionals.
No, thank you, Mohammed. And Iyad, as a compliance individual at Unlimit, what can you add to that? How do you train the next generation that is coming through?
Thank you very much for this opportunity to speak on this topic. Mohammed, thank you for the breakdown. I want to emphasize more on capacity building and continuous professional development. Nigeria currently is faced with, Nigeria and Africa as a whole is currently faced with more of this drift of professionals heading out for greener pastures. However, for the younger ones that are coming up in the compliance space, it is essential that we build capacity in the areas of compliance. And one of such ways is to be involved and enroll for various workshops, webinars like this one that is currently going on, conferences and other trainings that are organized to keep professionals updated on the regulatory changes and technological advancements and best practices. Amongst the few bodies that of course I can recommend for those who are coming up in this field, especially for those who are in Nigeria, the Compliance Institute Nigeria will be a good place to start. That will give you a good foundation and a step into the door for as many that wants to improve their compliance skills. I will also recommend, of course, international bodies around compliance, the Association for Certified Financial Crimes Specialists, the ACFCS, the ACAMS is also a good one. CFE is also a good one to have if you can. I understand the cost implications of most of these professional certificates, but if you are able to start from there, it will give you the springboard that you need to advance yourself within the compliance space. And aside capacity development, of course, Mohammed had mentioned the mentorship. Mentorship is something that we are lacking here in this part of Africa. It's something I believe if we are able to adopt, it will help to strengthen and build the capacity of the generation that is forthcoming. The compliance space is relatively, I would say, is growing in Nigeria, and we need those who have advanced to some extent to be able to give back to the society by mentoring the younger ones who are coming up in the space, in the compliance space. Outside that, of course, training, continuous training is very key in compliance. It's one of the best ways we can enhance your abilities. And of course, the use of technology and innovation, which is part of what we have discussed or what we are discussing here to enhance the training of the younger ones. One-on-one mentorship may be difficult because of the limited resources we have in terms of experienced compliance professionals. However, with the use of RegTech technologies and other forms of technology, we can and are able to pass down these trainings to these younger ones so that they are able to do much more than we are doing today. And I'm sure with that, we see Nigeria and the other African countries exit the grey list as soon as possible. Thank you.
Thank you, Iyad. And just following on the same theme, and this is more for Abina and then for Mohammed, how can the skills gap, I mean, we've touched upon obviously different training, this workshop, which was highlighted quite well there. I mean, there's numerous different organizations doing something similar as well. I mean, how else or what else can be done in order to close that gap in terms of skill set in compliance, Abina?
Okay, well, I will complete starting from what we had finished, and actually to addressing the skill gaps in compliance, it requires a multifaceted dynamic approach. That this approach have to combine targeted training, relevant certifications, and the commitment to continuous learning. And we can effectively tackle this challenge by comprehensive training programs, including developed tiered training programs catering to different experience levels from entry level to executive levels. Also offer specialized tracks for various compliance areas and implement a blended learning approach combining online course, in-person workshops, practical simulations, internships. Secondly, the technology integration, that we need to offer training on emerging technologies in compliance, and I mean with that the artificial intelligence and the machine learning, and this is a new emerging technology coming to the compliance industry, and also the regulatory cooperation, and we see this as now we have Muhammad Jia and other compliance professionals. So this is, we can consider it some kind of regulatory cooperation that we need to always partner with regulatory bodies to ensure that the trainings align with the current and upcoming regulatory needs. And I will take from what he had said that for some specific courses like CAMS or from the ASC, and he was talking about the cost of these courses. But from my side, I have also to declare that other institutions providing training courses specifically for what KYC Lookup and KYC in Africa are doing. They have put these principles into actions that they are offering all of these courses which have the diversity needs for the compliance professionals at all career stages. And it's not necessary to go for this high level of cost to get this compliance training courses, but also we can cover it for because this cost will not be applicable for the new generation and the fresh grads of the who want to learn compliance. So we can keep it for the experts or the compliance professionals who want to enhance their career. But if you are curious about the new generation, so we can introduce compliance and AML and safety for them by these courses. As the mission for us is just goes beyond merely impacting knowledge. We are aiming to foster culture where compliance is seen as a critical business function and a dynamic career path. The initiative for this target fresh graduates and young professionals, which are practically crucial in addressing this skill gap. And by introducing for them compliance and ML concept early in their career. So now what we are doing we are doing a strategic approach by building a pipeline of professionals, of compliance professionals who can support all of the business functions in different industries, and they are well versed in current with the current regulations and the upcoming changes in the regulations. So this flexibility of the certification programs and the continuous learning platform, at the end, it ensures that professionals in compliance and new early compliance learning are staying ahead for the rapidly changing in the regulatory landscape. And also, they are having the real-time updates and have access to global community of experts that enable professionals to continuously upskill and remain compliant with these new regulations.
Thank you, Mohammed. No, that's very insightful. So now, I mean, one of the topics that we've been discussing is obviously regulation, private sector, public sector, education and training, and it's been touched upon already, and that's data. I mean, if we go back a number of years, cash was king back in the day, but now what seems to be king is data and analytics, which sits at the core of any AML effort, whether it's obviously regardless of the sector itself. I mean, having the right data and analytics is key. So Sophie, from your perspective, what can financial institutions do in order to use that data effectively to fight financial crime?
Yeah. Hi, are you getting me? Hi, William.
Yes, we have you.
Okay, all right. So when it comes to if I got your question correctly, when it comes to public-private partnership, I think it still needs a lot of improvement. It's not really very effective because both parties still have a lot to do to be able to meet up with what is required. For example, the private sector, who are those who have that proximity to financial transactions? Are they capable to put in place the right KYC procedures? Are they capable to do the required monitoring to be able to report suspicious transactions to regulators, who are the public sector, so that collaboration can be enhanced for better results? Those are the questions we should ask ourselves. And at the level of the public sector, they are supposed to put in place the guidelines, the laws, the regulations, and equally guide the private sector, so that the regulations can be implemented effectively. But now, is that guidance being done? That is the questions we have to ask ourselves. Now, there are a lot of investigations that are being done, especially in Africa as general and Nigeria. How many prosecutions do we get for people who commit a money laundering act? So all these rules that have to be done effectively for that partnership to be solid, because feedback from the public sector enables the private sector to be able to put in more strategies, to be able to identify any criminals, so that all those networks can be dismantled to protect the financial system, the economy, from further financial crimes. Those are the questions we need to ask ourselves. So we see that a lot still needs to be done for the public-private partnership to be effective, and for us to be able to address all these social ills that are hampering the economy.
Couldn't agree more with you, Sophie, especially in regards of the different sectors, is building those bridges in order to then be able to transfer data between sectors, between the different industries as well. Thank you so much for that. So we're reaching the tail end. So we've got two specific topics to discuss. Next one being the threat in the landscape. So Robinson and Rory, this one's for you. What are some of the most pressing financial crimes and anti-money laundering issues, and how do they differ, like, depending on the region?
So we're talking about the industry adaptation. I've listened to Sophia when she mentioned implementing all these regulations. Dr. Gia as well did a very brilliant topic in addressing why we need to get out of the FATF gray list. But I think we need to go back to the drawing board and understand, because this frameworks, this updates come in year out, and we need to adapt. Okay, so different regulations have been issued over the years, but only recently to Nigeria's current FATF gray listing, there has been several regulatory updates with respect to the guidance from the central bank, as well as the NFIU, which have occurred from 2022 till date. However, we want to talk about some key pivotal acts that were signed into law in 2022 and other regulations that were also released in 2023, which I will explain as I go. Now, the very first pivotal act is the Money Laundering Prevention and Prohibition Act, which tackles money laundering. And I'm going to break it down so that we understand how we can take this updates and then we can be able to put it into figures when we are actually looking out for predicate crimes like just little predicate crimes that form the larger picture of money laundering. Okay, so for the MLPPA, the financial institutions were mandated to report excessive transaction amounts, both in Naira and in dollars, as stipulated in the Act, for both individuals and for corporate bodies, to the NFIU, to the EFCC, to the CBN, and to the SEC where applicable. Okay, the financial institutions were also mandated to prohibit splitting single transactions by customers to avoid reporting. This is another way they can avoid reporting, and we won't even know there's money laundering going on. And another key part in that act was the identification of customers and politically exposed persons. Another key one was the attorney-client privilege that does not apply to certain transactions or any proceeds from an unlawful act. Just like when people come in and say they want to buy properties and they say they use their lawyers to acquire such properties. That act speaks specifically about that and how you can avoid that. Financial institutions were also told particularly to evaluate new business products and technology for money laundering and terrorist financing risk, especially with the springing up of fintechs and new products coming up. I think we should bring out a risk preventive measure. Okay, so there should be something like a product risk assessment that would check and look at these products that you're trying to roll out and see if it's not in any way going to enhance money laundering or hide terrorism financing in any way. Another part of that is expanding the scope of the financial institutions to include virtual asset service providers, as well as DNFBPs to include entities like dealers in precious stone. So that are those key areas in the Money Laundering Prevention and Prohibition Act. The second one is the Terrorism Prevention and Prohibition Act, which tackles terrorism financing. Okay, we've been told that that in that act that there's been an expansion in the definition of terrorism. Okay, with the keyword knowledge. Okay, so anybody that it's going to be supporting or giving provision or collecting or receiving or even soliciting or possessing any property, fund, service to be used for such terrorist acts will be indicted. Okay, we're also told that we should establish a mechanism for reporting suspected individuals of financial support. And so that should form one of the mechanisms we should put in place when we're trying to detect such. Also told in that TPPA that courts should grant territorial jurisdictions on matters of terrorism, with measures should be taken for detection, as well as freezing those accounts and forfeiture, and also confiscating of such properties so they won't be used. And then lastly, the compensation of victims of the act of terrorism was also put in that act, which is very important. Now, we have the third act, which I think is also important, which is the CBN Customer Due Diligence Regulation for 2023, that talked about the addition of customer due diligence requirements, such as the collection of BVN, public positions. I think that would help to identify PEPs, as well as social media handles, which has been a debate, especially with the data protection people. And then secondly, having a detailed customer verification process for individuals and entities, as well as verifying phone numbers, especially for those that provide wallet services. And then the fourth key one is the guidance on ultimate beneficial ownership of legal persons and legal arrangements. Well, here the financial institutions were mandated to unveil beneficial owners behind legal persons or arrangements, to curb the use of corporate vehicles being used to cover up or convert their proceeds of crime. Hence the need to identify, the need to verify, and have credible and reliable information on the legal and beneficial owners of all corporate vehicles and entities. And then lastly, if we all know, the NFIU has played a pivotal role by constantly publishing newsletters and providing updates on both global and local money laundering and terrorist financing issues. So in summary, all these updates and measures have been put in place to help compliance officers to build the financial systems to combat money laundering and terrorist financing and financial crime. Now, when we apply these preventive measures, it will enhance our monitoring and reporting techniques to the NFIU. Dr. Gia specifically talked about areas of issues that were pointed out by the mutual evaluation report that was given out. And if I noted like 5 of them, and I mentioned one here too. They said 1, international cooperation in anti-money laundering and financing of terrorism. 2, supervision of the financial institutions. 3, the prevention of misuse of legal persons, which I've mentioned, and investigation of money laundering offenses, which I also mentioned. When you put this together, and you also note what Sophia mentioned about implementing all these regulations, once we have these ideas at the back of our minds, it will be much easier to tackle these issues at hand, take Nigeria out of the gray list, and I think it will be a better environment for us. Thank you.
Thank you, Robertson. And Rory, from your perspective, being based in the UK and the EU, what would you add to that? I mean, how is it different?
I suppose on to Robinson's point about verifying beneficial ownership in Nigeria, it's actually much harder in Nigeria to have a beneficial owner identification process compared to Europe. In Europe, our beneficial owner threshold is over 25%, which means the maximum amount of individuals that you're identifying, that you're verifying, that you're screening, that you're looking at politically exposed people, is actually only 3 people. You can only have 3, and then you go over. Mathematically, it's impossible after that. Your beneficial ownership in Nigeria is much lower, the threshold. It means that you have to identify more people. You have to screen more people. You have more false positives. You have to verify the documentation correctly, and you're going to identify more politically exposed people. So therefore, it's exponentially more difficult in Nigeria to onboard non-individual accounts compared to Europe, to the EU or the UK. We're also seeing, since the grey listing, we're seeing a lot of activity from Nigerian prospects around being able to convince European, UK, and American banks that their AML processes and for correspondent banking relationships are above a grey listing essentially. So we're bringing a risked engine to client onboarding that is able to convince international banks that the processes in place by Nigerian banking firms are above and beyond what is looked for currently under your legislation. So That's a cover. I mean, I could go on about trade finance and Nigeria being the center of trade for Western Africa, and therefore, you know, is susceptible to trade finance issues. And obviously, non-profit organizations has been highlighted by FATF as being an issue globally. So that, you know, also has a distinct relevance when it comes to Western Africa.
Oh, thank you, Rory. I mean, another topic that we can easily spend all day is dispositioning of false positives when it comes to screening. I mean, that's a whole webinar, probably a whole conference can be done just on screening itself.
I mean, one of the major statistics that we've got out is, and this goes beyond screening, it goes to transaction monitoring screening. 95% of suspected activities identified by suspicious activity teams in banking are false positives. So you're looking for needles in haystacks.
Very much so. Very much so, and the criminals are aware of that. So hence why they continue to do what they're doing and everything. Thank you both for your input. So now looking into the future and our last topic of the day. And this is one for Iyad. Nigeria's AML and CFT landscape come 2025 and beyond. I mean, what are the predictions and recommendations for CFT and AML industry moving forward?
Okay, thank you for this. Looking into the future of AML CFT landscape in Nigeria, one of the things that I see increased regulatory scrutiny. This is because as we try to exit the grey list, definitely the regulators will come hard on both banks and designated non-financial institutions. So I see an increased regulatory scrutiny because we need to exit the grey list as soon as possible. 2025 and beyond, definitely there will be an intense adoption of advanced technologies in various sectors, especially within compliance. I see artificial intelligence, blockchain, and various RegTech solutions being adopted to be able to meet up with the transaction monitoring, just like the last speaker said, over 95 to 98% of our transaction monitoring often falls into the false positive bracket, of which a whole lot needs to be done to be able to fish out the real transactions that we need to report and investigate. Also, 2025 and beyond, I see Nigeria and the African continent aligning more with the FATF standards vis-a-vis areas, some of the recommendations that prior to this time have not been fully adopted, things around the travel rule. I see more use around the digital assets. So those are some of the things we see that will definitely happen. Then, of course, more focus on capacity building. I see more compliance officers, especially the ones coming up, being trained and being prepared for the tax ahead. From the regulators, we are looking at a $1 trillion economy, and that's a huge economy, and compliance officers definitely we need to build capacity to meet up with that projected economic activity. So in terms of recommendations, I would, of course, I would recommend that more investment to go into technology. More firms need to invest in various kinds of AML solutions that will enable us to monitor the financial ecosystem. Of course, I see strengthened collaboration amongst various regulatory bodies. The NIBS, for instance, I see NIBS collaborating with the NIMC and all the other various regulators, the NCC, and the NFIU, because it is going to be critical for us to harmonize all our various KYC databases which we run. For instance, we have the NIMC database, we have the driver's license, we have various identification databases. So I see a harmonization amongst these databases for more effective AML reviews. Then, of course, there's going to be enhanced public awareness to spread the fact that compliance is here to stay, and it's essential for us to be compliant than to pay the cost or the price for non-compliance. Then, of course, continuous professional development. It's also one of the recommendations to be able to meet up with the capacity building that we have also mentioned. Thank you.
No, thank you. Yeah. And just bringing it over to Abina, I mean, what thoughts do you have on that, or even on the previous question in regards of how is it different then depending on the region?
Okay, thank you very much. I think there was a mix-up here. So I'm speaking to the need to bridge the knowledge gap in compliance through training. I want to speak that the fact to it that led to the various gaps, as well as what is it. I want to emphasize that there is difference between knowledge of the law and then the implementation of that knowledge. What brings me to that point is a situation, for instance, a lawyer who may not have been, a judge who may read the law that has to do with anti-money laundering and understand what the law says. But that law did not actually talk about the implications and implementation of those laws. That can only be learned or taught in a training environment. And so that becomes a concern that even our judiciary might be susceptible to not being able to implement. The gap might still be there if there's no proper training. So the gap in training can come from, gap in compliance can come from ignorance, outright ignorance of what to do, indifference of those who have known what to do but doesn't consider it as important, and outright disregard by those who know but outrightly don't want to obey it. Another thing also that we can talk about that lead to such gap is the disruption and innovation in technology. What used to be traditional way of doing things have been disrupted, and so because of that, the innovations that come to play lead to a lot of regulatory upbeats, and that requires a lot of training to get people braced up. Then to bridge that gap is a issue of continuous training. Now, what do we do by such activities? We need to be intentional about the fact that there is a lot of gap for all stakeholders, from the regulatory authorities to the law enforcement agents to operators and consultants. Every one of us must be intentional to the fact that there are a lot of gaps in compliance. Then moving away from that intentional and desire to bridge that gap, there must be an effective collaboration among stakeholders. Everyone that has spoken has, starting from Mr. Jia down to everyone here, has spoken about effective both local and international collaboration. Collaboration among stakeholders, including the regulators, including the operators, law enforcement agencies, and everyone that has something to do. They should be collaborating, knowledge sharing, information sharing, and all of that. Apart from that, there will be the need to have advocacies and working groups. Advocacy and working group will go along with like what we have in our ACOBIN, Association of Chief Compliance Officers of the Bank. We also have something like that, multi-stakeholders working group for charities existing already in Nigeria, and many other working group that I think the World Bank group, the Edmond group is also a working group. Those are things that can lead to advancing the knowledge that has to bridge that gap. Then also we must have, I think somebody mentioned that the issue of cultural shift from the scratch. Our educational system has to also look at putting compliance training and part of curriculum right from the primary schools and secondary school. So now looking at the issue of the training, having now taken the part, looking at how to bridge, our training must be such that are customized in program, tailored content to suit industry and not always a generic one. suit organizations in risk-based approach. It also must be interactive in such a learning way to make people get interested in it. Our training must be regular and an ongoing training. The frequency must be such that it's not just a one-off issue that is done and left. It should be something that is more regular. And there should also be a form of micro-learning system whereby small units are gathered from time to time, even within the organizations and various industries and various geographical locations need to have that so that people have a better knowledge about what is expected. Compliance officers, and as well as from the compliance officer point of view, it may not be a problem, but those who are supposed to implement the compliance issues are the way the issues come from. Then we also have to look at the issue of clear communication. Our communication method must be simplified in terms of complex information and must be consistent messages. So everyone should be consistently passing the message within the organization so that it will sync within the organization, sync consistently. What they say, repetition make for emphasis. Even when it is said, it should be continuously said. Then we have said so much about leveraging on technology. It is not, can be overemphasized. E-learning platforms should be encouraged. I mean, as we are speaking here, a lot of people are connected across the globe. Within the organization, the same thing can happen. Then one thing that have not happened regularly in this environment is gamification. Make gamification of compliance issues, compliance training, and learning should be part of things to be done to make compliance fun and not to be seen as something difficult. Then we also look at the leadership involvement. We must have the right tone from the top, as well as open communication, whereby the leadership must show that evidence that compliance, there's a zero tolerance in non-compliance issues. Then we also have a system to measure and adapt what we are doing, to track progress and have a feedback loop that will be able to tell us what to improve and what to do at every point in time. Apart from that, also, this cultural integration is key. Compliance should be embedded into people's system. Every organization should have compliance as a cultural something. We must not begin to see compliance as a regulatory requirement, whereby because NICOM, because CBN, because NFIU, because we have said we should do it, and because we begin to do it because of the no. It should form part of our cultural shift, organizational culture, and recognize that we should always have a way of recognizing and rewarding effective compliance system. And besides that, also the risk-based approach to training, which focuses on high-risk areas, is very, very key. Now, in summary, is that I think Sophia mentioned something about also the issue of a sanction that have been a little bit low in this environment, where there are breaches also as an extreme or last resort. There should be adequate sanction also for such breaches, especially for those who, remember I started by categorizing those where the gap coming from as a result of ignorance, as a result of indifference and outright disregard, especially for those who outrightly disregarded the act, the law, what should be done. Outright sanctions should be done, should be implemented for such individuals as well as organizations. So because of our time, I'm going to stop here. The first is that there is a lot of gap in knowledge, and that should be bridged by having an intentional approach to it, a collaborate effectively, advocacy that has to be done regularly, continuously, like what somebody mentioned here about what CIN is doing, Compliance Institute Nigeria on a bi-weekly webinar, free of charge. So as much as possible, like what we are doing now also is a free webinar. Many institutions, many organizations and professionals can do that. Regulatory authorities can do that continuously at various levels. By so doing, the knowledge gap will be definitely reduced as to be able to ensure that compliance. So we're able to isolate the bad guys. A lot of people get involved with the criminals around us because they are actually not aware of what that's involved. I heard somebody who was saying sometime he was asked, I think in a church, was asked to come and pray for someone, and that was a very huge amount of money in cash. And he, because of his ignorance of what that could be, he thought it was a miracle. So a lot of people don't understand that some of these things are criminal acts. You know, like I was also giving an instance about a judge. For instance, assuming a judge who have just read the law on money laundering and felt it was what the law is, but has not been subjected into a classroom or a training session like this to be told about the implications, the action, how this thing works. You just see it as like a mere routine of law issues, but that training will create that particular passion and better understanding. The approach will vary, you know. So those are the kind of things that I think we need to do. Our orientation also is key. Value orientation. The orientation is very, very important to be able to have this concept of risk, compliance risk behavior reduced from our system, whereby people look at it from a logical point of view, whereby what you are looking at, what you're going to benefit or gain vis-a-vis the compliance, whereby, for instance, somebody is seen as you are to make 100 million naira, and you have to be fined a 10 million naira, and you feel, logically speaking, let me just go and do that, and they pay 10 million naira. By logically speaking, when you are making profit of 90 million, but over time you are giving yourself a bad reputation. So we need to talk about from that perspective, beyond just a regulatory point of view, begin to see AML implementation or compliance as a risk management strategy, which will be something that should be more seen as a cheaper, easier to go than non-compliance. Thank you.
Thank you, Obina. I mean, I couldn't agree more, and I'm glad that obviously you contributed towards the end there. Unfortunately, all things that are good come to an end, but with that said, I just want to open it to any of the other panelists who want to contribute or want to add a final remark or a final recommendation for our audience today.
Just a quick one. The AML intelligence out of Ireland has a certified anti-money laundering course that's backed by the Technical University of Dublin. So you get a university recognized qualification. I lecture at it myself, so yeah, I lecture at it myself. So I'll put my hand up and say I'm involved. But if anybody wants to go on the internet and have a look, it differs from CAMS in the fact that it's a one-off program with one-off exam. You don't have to, you know, have a yearly review and a yearly
membership
subscription. So yeah.
Thank you, Rory. And I don't know if there's any other panelists who want to add something. Otherwise, I can read out some of the questions that have been coming through.
William, I would like to add one aspect we've not talked about. I just want to add that we need to understand our region and our countries, because at times we don't have all the resources in the world. So for us to be able to achieve our objectives and actually fight money laundering and terrorism financing, we need to know what is a major risk in our region. For example, in Africa, one of the major risks we know is corruption. And another one is a fraud, online fraud. So when you master and you know what is the major risk in your region, you're able to tell all your resources and achieve better results. Because you cannot be in, for example, Africa, and you're looking at another problem that is in Europe. You see, you might miss the point and you not use the resources appropriately. So I just thought I should add this before we close.
Thank you, Sophie, and it's a very valid point. And one again, once I was in Nigeria earlier in the year, that was one of the topics of conversations. How is it different, even not just in the region, but from country to country as well. So thank you very much. So just conscious of time, I'm just going to read out some of the questions that have been coming through the chat. Is the material going to be shared with the audience? Yes, everyone will get a copy of some of the material that are being distributed and shown to us today. The other question was around, is there any RegTech and KYC in Africa courses available? The answer is yes. There'll be further information in regards to that. Rory also highlighted one that is out of Dublin as well, which would be really good. And then on top of that, obviously you have your international associations such as ACAMS and the ICA and everything. But from our perspective, obviously we want to help everyone, and most importantly, conscious of budgets and everyone else. So we'll share that information. And one that is obviously not necessarily being put as a question, but it's worth highlighting that for everyone who's obviously participated as part of the live audience today, they will also receive a digital certificate of participation as a thank you, as a token of appreciation for your time, but most importantly, for us to continue to bring this kind of material. One of the topics obviously that was touched is training. Personally, there's not enough training out there that is going to help the audience. There's a lot of information, but it's all scattered around in different places and everything. So it's important to be able to bring the insight of the professionals who've been in the industry for a number of years and bring to the insights to you as your audience online in this case. And that's the beauty of it. I mean, we've touched upon technology, but being able to put together this workshop with individuals from so many different locations and to be able to bring it to you, whether in the office, at home, or sitting in the car, is something amazing that we're all willing to do more in the future. So with that said, first of all, I would like to extend my thank you to all the panelists. Your insights have been very valuable, not just for the audience, but also for myself as the founder of KYC Lookup and KYC in Africa. So it's always good to hear the perspective from different angles. And then secondly, my gratitude goes to everyone who's attended, who obviously your patience at the beginning and everything, but throughout the session, the numbers have been extremely high. So once again, thank you for your participation. And I've got no doubt that we're going to be bringing more material to you. So unfortunately, we have to end today's session, but once again, thank you for your participation. Thank you for logging in, and we can't wait to have you again in future sessions. Once again, thank you and goodbye.
Thank you, William. That was brilliant.
Thank you, everyone.
Yeah,
Thank you very much.
Thank you. Thank you, everyone.
Thank you. Bye.
Bye for now.